Happy Friday. Wow, another very weak jobs report has pushed interest rates down to the low sixes for conventional loans and government loans into the high fives. These are the lowest levels in well over a year. So, the jobs report this morning, uh, economists were expecting 75,000 jobs created. The number was 22,000. A couple months ago, it was actually revised lower and it became a negative number. So now there are some clear cracks in the armor of the labor market. So, what is this going to do? This is pretty much going to guarantee a Fed rate cut at the September meeting. Now, there's more data that's going to unfold over the next couple of weeks, including inflation reports. We don't really know what effect the tariffs are going to have on that, but usually labor is more important than inflation in the eyes of the Fed, in the eyes of the bond market and interest rates. So, getting a lot of calls today, of course, from clients who have rates in the sevens and even the high sixes that are looking to do something as far as refinances. So we're working through that. But of course, my main priority are people who are looking to buy a home. Remember, as we've been talking about, I know this came a little later than what we were originally thinking, these lower rates, but we were expecting this. And when the rates move lower, as the media picks up on this, there is going to be more competition out there buying homes. So things like big seller credits for buy downs, things like that may disappear very quickly. So if you need any help this weekend, we are here to help. Feel free to reach out. We can still get you closed by the end of September if you go under contract this weekend. And we'll continue to look forward to how this market evolves. But we did lock some clients today that went under contract in the low sixes, some even in the high fives, and everybody is quite happy with. Just looking back 35 days, rates were close to 7%. So again, if you need anything, feel free to reach out. This is great news overall for if you're in the market for buying a home or refinancing. And we'll continue to monitor this economic data as it evolves and see how the Fed will react. Now, I mentioned this in the last couple of videos, but if the Fed cuts rates, remember, mortgage rates have already moved lower in anticipation of the Fed cutting rates. So just because the Fed cuts rates does not mean that mortgage rates will move lower. We saw the same exact scenario play out last year. And when they cut rates, mortgage rates actually moved higher in September of 24. So strike while the iron is hot. Let us know if we can help, and we'll talk to you soon. Bye-bye.